Good morning, everyone, and welcome to our webinar on IPM performance for the month of Feb. Thank you, everyone, for joining us today on a Saturday morning. So we have covered some interesting topics today besides the performance of the IPM. So let us start and look at what is it that we will be discussing today. We'll start with our regular sessions on the IPM therapy performance, the growth drivers, the top 40 corporates, the top 40 brands, and the key takeaways from what has the IPM performance look like for the month of February. Then we are looking at certain interesting topics on the challenges to stay at the top and to reach the top. And also we look at the curtain raiser for our IPM Diaries episode 5 for the month of March. So coming to the IPM therapy performance, the market has shown a very good, healthy growth of close to 7.5% for the month of February. And the unit growth also seems to be positive. Majority or almost all the therapy areas have shown a positive growth trend in terms of value. And there are certain therapy areas amongst the top who have done much better than the overall IPM. Example, the cardiac therapy, the gastro therapy, which are the top contributing therapies of the Indian pharma market, have shown a very good, almost 10% value growth for the month of February. Key things to note is certain therapies like the cardiac, the gastro, the diabetes, the nutritionals, the gynecologicals, among the top, have shown a very good unit growth as well. So this should ideally get reflected in the volume growth shown by these products or shown by these therapies. Coming to the growth drivers, for the month of February, the growth seems to be majorly driven by the new introductions as well as the pricing. Volume growth overall for the market seems to be stagnated. I wouldn't call it 0.2% negative growth. I would say the growth has almost stagnated. If I look at a therapy level, there are certain therapies like the cardiac therapy, the gastrotherapy, the blood-related therapy, the antineoplastics, the hormones, the urology, among the top therapies, where all the three levers of the growth drivers seem to be positive for the month of February. And if I were to look at overall for Mat Feb period, in majority of the cases, the volume growth is positive except a few sections. Coming to the top 40 corporates, now, where the IPM has shown a growth of close to 7.5% for the month of February, you will see companies like Sun, Intas, Torrent, Zydus, and Micro among the top 20 players have shown a good double-digit value growth. And this is quite encouraging. If you look at the top 20 companies, they contribute to almost 70% of the Indian pharma market, and they drive to the growth of the market to a great extent, and they have shown a good double-digit growth. If you look at the next 20 companies, there are a more number of players who have shown double-digit growth. Companies like JB Chemicals, FDC, Ajanta, Laranon, P&G, Corona, Nutricia, Bayer, they have shown a very robust double-digit growth. Coming to the top brands, GSK and USV, they maintain their Augmentin and Glycomet GP. From GSK and USV, they maintain their number 1 position and number 2 position respectively. For the month of February, Liu 52 again comes at the number 3 position. If you had seen for the month of Jan, also Liu 52 had come to the number 3 position, though at a MAT level, it stays at a number 6 position. Other brands which have shown a robust double-digit value and unit growth for the month of February are Pan, Rhizodec, Thyronorm, Manforce, Silacar, and Electral. Some more brands from rank 21 to 40 which have shown a robust double-digit growth are Telma, Ribelsus, Bicosuls, and T-Bact. These brands, while the IPM has shown a growth of 7.5% and unit growth of 1.5%, if you look at their value and unit growth, it is extremely encouraging. So, to summarize the overall performance for the month of Feb, the IPM has shown a value growth of around 7.5% with majority of the therapies or almost all therapies being on a positive growth track. New introductions and price growth have driven the market growth for the month of Feb. For the month of Feb, among the top players, almost majority of them have shown encouraging value growth. Augmentin and Glycomet GP continue to retain their leadership position, and Liu 52 stands at number 3 position even for the month of Feb. This was a crisp summary of how the Indian pharma market has performed for the month of February. Now let us go to our special topic for the month of Feb. Today we have chosen the topic challenges to stay at the top and reach the top. Why we chose this topic? Let me just, before even going to the discussion in terms of numbers, let us understand why it was important to look at this topic. When we keep on looking at data or whatever we have discussed so far, we talked about the market rank, the market position, the market growth, the double digit growth, players coming up. So this all data tells us a story about the market opportunities, the struggles, the aspirations to achieve strong milestones. While we discuss about the brands, the story is not just about the brands, but it is the teams that have strived hard to achieve enviable milestones over several years. So when I'm talking about certain brands being at a leadership position, it is the efforts that have gone behind these brands by several teams over a period of time, which have made these brands come to a position where they are today and stay at that position. Setting benchmarks, raising the bar, creates healthy competition and enables the industry to perform better. Probably this may also be the reason why Indian pharma market constantly strives to grow better and break its own records. So the approach that we have used, I mean, there are several examples in the Indian pharma market, but because of paucity of time, we will not be in a position to discuss all. So what we have done is we have tried to study how challenging it is for the market leader, first of all, to reach the top position in face of the market growth challenges and aspiring competitors to take away their slot. We also study how it is difficult for an aspirant to reach the top slot, as everyone is vying for the same position. We are focused on a few key therapy areas where we studied the 5-year trend for the top brands, top 10 brands, in terms of the gap between the top brand and the rest, the multiplier effect, and the need to step up on growth despite the slowing of the overall market. So we have taken some 5 to 6 therapy areas and studied. But when we study those 5 to 6 therapy areas, that itself gives us an understanding of the impact of efforts that have to be taken to reach that position or sustain that position. Let us look at the anti-diabetes therapy. Now here we are looking at therapy in general. So, this discussion is more about reaching that slot. So we may not look at whether it is insulin therapy or it is traditional OADs or the new OADs. We don't look at that. We just look at the number one position. Because when we talk about the position of the brands, the rank of the brands in the Indian pharma market, we don't talk about anti-infectives brand or a gastro brand or a cardiac brand. We talk about the number one brand and number two brand. So in a similar way, let us look at when we look at the anti-diabetes therapy, which are the brands which come among the top or, they have stayed among the top for a very long time. So if you look at Glycomet GP, as of today for Feb, the rank of this brand is at number one. But then there are several big brands which are there in competition who are trying to reach that position. Was Glycomet GP at a number one position for a very long time? If you see, the positions have switched somewhere over here, where now Glycomet GP has moved to the number one position. Also, if you look at the challenges that the brand would have, it's not just the immediate competitors which are trying to vie for its position, but the brand has also to manage the competition that comes with the several newer molecules like gliptins, SGLT2s within the diabetes segment, which are losing patent, and many branded generics trying to capture that share. Also, there are certain new entrants like Rysodeg, Ribelsus. I call them new entrants because though here the launch date is December 14, as compared to the other conventional brands, they are relatively new brands. On a very short period of time, these brands have tried to reach this position. They have tried to be among the top players in the diabetes segment today. So if I look at the value gap between the leaders and the followers, so what I have done over here is, this is a simple subtraction of 800 minus 776, which comes to 23. 800 minus 577, which comes to 223. So it's the gap, not 800 minus, it is 76 minus 800. So we have tried to look at what is the gap between the number one player and me. and what is the effort that the number two player would have to take to that position. Also, wider the gap also explains or tells us how much strong the brand is in that market and how difficult it is for the players to match up to that and come to that position. So if you look at Glycomet GP today, the gap between the Glycomet GP and the rest of the contenders is quite huge. Okay, except Mixtard, where the gap is just 23 crores. The Glycomet GP as a brand seems to be safely positioned in the anti-diabetes segment. That doesn't mean Glycomet GP stays at as a complacent brand, because a number one brand will try to do everything to retain its number one position. Now let us look at the 5-year CAGR and growth of all these brands. If you look at a bigger base, the brand has got a 5-year CAGR of 10%, which is much, much higher than the 5-year CAGR of the anti-diabetes therapy itself. While in the last 2 years, the growth may have slowed down, which may be because of several factors like branded generics impacting or creating ripples in the OAD market. But still, despite those challenges, Glycomet GP stays strong and to maintain its number one position. Also, if you look at the growth stories of the other brands who are trying to aspire to reach to that position, you will see that certain brands are actually growing at a very fast pace. Covering this gap of, still 200 crores, which is there between the number one, number two, number three players, may still be challenging. But the aspirants know that there is an opportunity and they will strive hard to do it. If you look at the multiplier effect of Feb 25 over 21, what I have done is I have considered Feb 21 as the base and Feb 25 as the current. So it is division of this Feb 25 over Feb 21 to understand how many times has the market grown over a period of time. So if I look at the overall market, it has grown by close to, it's almost 1.3 times. But if you look at my market leader, Glycomet GP has actually, the growth is almost 1.5 times. If you see amongst the top two players, my Glycomet GP has actually grown really well as compared to the market growth. The other aspirant, Rhizodeg, if you see, the growth is, it has multiplied almost 2.6 times. For a brand like Ribelsus, which is a relatively new launch, I really did not have a base of 2021. So I have taken a base of 2023. Here, if I see, it's almost become 4 times. So this is the effort, or these are the efforts that the market leader has to put in to ensure that their position is sustained and maintained. And these are the efforts that the aspirants have to put in to ensure that they reach that number one spot. So in this example, what we see is the gap between the number one player and the other players may be on a relatively higher side. Now let us take another example where the competition is really cutthroat. Now let us look at the cardiac therapy, wherein Cilacar stays at the number one position, and it has been at the number one position for the last 2 years. Now, if I were to look at the gap between the number one player and the rest three players, the gap is actually not much. It's a gap of around 20-25 crores, which can be easily bridged. Okay, if you look at the cardiac therapy, we keep on talking about the cardiac therapy is today the topmost therapy, also a therapy which is growing very healthily in terms of value as well as units. Also, we keep on hearing a lot about the lifestyle diseases and cardio-diabetes being an opportunity. So when all these positive or no, all these environmental factors seem to be positive for a brand, why not? Do you really think it is challenging for the other three aspirants to cover this gap? It is not very difficult. So the challenge stays with the market leader to sustain and stick to that position. Even if I were to look at a CAGR, Cilacar at a relatively higher base has managed to have a very robust and double-digit CAGR, though the growth has slowed down. Also, typically, in the previous example that we had seen for the diabetes case, as the market or as the brand starts pushing a lot on growth, the positions flip, and at that point of time, the second aspirant goes to the number, or the first aspirant after the market leader goes to the number one position. Then the market leader has to sustain that growth. If you see overall market, the cardiac market has grown by 11% at a higher base. The growth over here is 7%. But if you see the challengers, all of them are taking utmost advantage of the market opportunity and to grab and reach that number one position. Despite a higher base, if you see in the last 5 years, the multiplier, Silacar has almost doubled in terms of turnover. But then if you see the other competitors, even they have done the same. So the competition over here is tough. So everyone is trying to make the most of the market opportunity. Obviously, the competition is going to be very, very tough for the market leader to sustain that position, and also equally for the number two, number three, and number four players, because everybody is fighting over here neck to neck. Coming to the gastrotherapy. If you look at the gastrotherapy, today PAN is at a number one position. But if you've heard the last two webinars, Liu 52 has started moving, and for the month at a month level, it is coming at a number three position. So gradually the brand is really picking up well. If I were to look at the gap between the number one player and the number two player, is it achievable to shift to the number one position? Not very difficult. Little efforts and the positions can switch. If I were to look at the growth also for the next contenders is quite good. While the top player is showing a very healthy CAGR of 17%, while the market shows a CAGR of 13%, the other players also are fighting hard over the last 5 years to meet that position, move to that position. In terms of multiplier effect, PAN being the market leader and at a higher base, admirable that it has almost doubled its turnover. But if you look at the competitors, even they are close by. Everybody is trying to make the most. If you see the gastro segment in the last 2-3 presentations, that was one segment where a very healthy value as well as unit growth was seen. And that is exactly replicated in this brand performance. Coming to the pain and analgesics therapy. In this pain and analgesics therapy, if you see, Zerodol from IPCA has actually maintained, Zerodol SP from IPCA has actually maintained this number one position over the last 5 years. How difficult it is to sustain that position, or are they comfortably placed in this number one position? For this brand, I would say comfortably placed, but then obviously IPCA being IPCA, it will not stay complacent and will keep on fighting and ensuring that the number one position is maintained. If I look at the growth, the 5-year growth trend, it's around 21%, where the market has grown by 14%. But if you look at these consecutive contenders, at least the next 3-4 contenders, the 5-year CAGR is positive. IPCA, while the market has shown a significant push of 26%, if you see, all of them took advantage of the opportunity and have grown well. Coming to the multiplier effect, though the gap between the number one and the number two player is significant, if you see, it has doubled. In fact, the brand has more than doubled over the last 5 years. Also close to its doubling, if you see, there are other brands like Chimeral Fort from Torrent. Even this brand has doubled. The next contender, Ultraset for Janssen, even that has doubled, though for the month of Feb, the growth of this brand seemed to have slowed down. This is the last therapy that we will be looking at, the nutritional therapy. Zincovit as a brand, if you see, the brand has really grown well, which it was the COVID opportunity. While if you see the other contenders, the number two players, the number 2 player, 3 player, 4 player, 5 player, and 6 player, the gap between the number one and number two player is, I wouldn't say very small. It is significant, but it is less than 100 crore. So Bicasuls from Pfizer over here, the gap is actually relatively lesser. Let us look at the growth. While the market has grown by around, shown a 5-year CAGR of 10%, we see the contenders over here, they are the ones which are really growing very aggressive in the last 2 years. Coming to the multiplier effect, because earlier it was a COVID opportunity. But good thing is, in COVID times, the brand has really grown well, and at least it has tried to sustain and maintain that position. However, other players are really catching up well, because everybody after post COVID, it was the nutritionals category which got a lot of attention and continues to catch a lot of attention, because while that immunity protector story may have got over, but companies today continue to cash on the opportunity where you need to proactively take care of your health rather than reactively start taking medicines. And for Aptimal Gold over here, since I did not have any value for the first 2 years, we have taken the multiplier effect over 2023. So to summarize this section, while significant effort in terms of sales, marketing, and innovation are needed to reach the number one position, sustaining the same is even more challenging as the top brand becomes the aspirational brand for everyone. It also needs to continuously outperform the overall market. New entrants with innovative therapeutic approach can create a new market and move up the ladder with a novel value proposition. Simple example is Ribelsis. It came as an anti-obesity drug. While it may have significant role in diabetes, but then a new value proposition has come and the brand has moved up in the market in terms of its position. For an aspirational brand, reaching the top position may seem a just miss on a few occasions. Why? Because the leaders strive to increase the gap and maintain that position. So once I have reached the number one position, what next? For me is I need to constantly ensure that the gap between me and my competitors stays significant, so that in no month I can be replaced by that number one position, from that number one position. Also, sometimes many contenders fight neck to neck. We have seen in the previous slide, the gap between the number one and number two, three, four players is hardly 20, 25, 30 crores. If the brand manages to push a little, reaching that number one slot is easily achievable. So this was about our special topic for the month, challenges to stay at the top and reach the top. Now we have started an initiative IPM Diaries. So we will be having one more session of IPM Diaries in the month of March, where we discuss the Davids and the Goliaths of the pharma industry who collectively strengthen the Indian pharma market. So if I were to talk about brief history, why we thought about taking this topic, if you see the Indian population over the last few years, I have taken the trend since 1950. Till 2024, it was 144 the market. So the population was around 1.4 billion. And yesterday, while preparing the presentation, I thought, let me look at what is the latest number coming to. It came to around 1.46 billion. So if I were to look at the 25-year CAGR, the market CAGR is around 6%, whereas the multiplier for the population is around 4%, is around 4 times. So if I were to look at the IPM value, how has the IPM changed over a period of time? It has moved from 700 to 2.2 lakh crore market. So if I look at the multiplier for the Indian pharma market, it is around 320 times. Now, in our last episode of IPM Diaries, we had discussed the different stages of growth of this Indian market. Wherein in MNCs, earlier it was the MNCs who largely dominated the market, formulations-based MNCs. In stage 2, it was the rise of the domestic companies with focus on bulk drugs. In stage 3, it was the domestic firms who dominated significant indigenous manufacture of bulk drugs and formulations. Stage 4, there was a significant focus on the product innovation, rapid growth, and rising trade surplus. And stage 5, it was the domestic players who starting investing in R&D and clinical trials. Many of the pharma entrepreneurs entered the market. A lot of investment firms came into picture who started investing, who started seeing pharma as a very high growth segment and started investing in startups, whether it was API manufacturers, contract drug manufacturers, or whether it was final branded product marketeers. Now, if I were to look at the trend of the market and the population in the last 5 years, what we see that the population growth has plateaued. But despite this plateau, we see the Indian pharma market really showing a steep growth trend. While there is a major shift to non-communicable diseases over the past 2 to 3 decades, the incidence and prevalence of disease in the population remains more or less same. Because all of a sudden, uh, in a year's time, if the prevalence of diabetes is 10%, it doesn't become 20%. So the population growth has slowed down. The prevalence may have increased slightly, but not significantly. The IPM diaries for the month of March, we will be discussing the different aspects that drive growth in the industry despite the sluggish population. If you look at the therapy growth versus population growth, the 5-year CAGR of the population is close to 1%, whereas the 5-year CAGR for the Indian pharma market is around 10%. While the Indian pharma market has shown an overall multiplier of almost 1.5, there are certain therapies which have really shown relatively strong multiplier. Though the incidence and growth of non-communicable diseases which fall in the chronic, subchronic category is said to be catching up fast, we also see a very healthy multiplier effect in certain acute therapies as well. As against the therapy growths, the population growth is very sluggish. Factors that push the market growth despite a slow population growth. So we will be studying the strategic approaches used by big and small players to drive this success and push the growth of the market despite a sluggish population growth. While the IPM has shown a multiplier of almost 1.5 over the year 2020, there are several Goliaths, the big pharma corporates, who have shown a multiplier of 1.7 despite a strong base. Despite recent entrants and limited presence in terms of portfolio geography, there are Davids, who are the smaller pharma players, who have shown a multiplier of around of 3 and above over the year 2020 and seem to be getting stronger day by day. While in the conventional story of David and Goliath, David aspired and achieved victory of the Goliath over the Goliaths. In the Indian pharma market, the Davids are inspired by the Goliaths and aspire to become one. So join us on 17th March at 10:30 a.m. to unveil this inspirational and aspirational journey. If you have missed the previous episodes of IPM Diaries, this is an initiative which we had started to focus on the strategic areas that drive exponential growth in the Indian pharma market. The earlier topics were power of mother brand, wherein we looked at how the mother brand has helped companies to develop therapy leadership and venture into innovative molecules in the therapy. Strategic partnerships was the second episode, wherein we looked at the inorganic growth levers adopted by the Indian pharma companies through interesting models and strategic partnerships. Evolution of lifestyle diseases and how they have shaped the Indian pharma market. Here we have studied the changing demographics of lifestyle disease pattern in the Indian pharma market and strategies followed by pharma companies to leverage the same. The last topic that we had was growth levers of the Indian healthcare industry and role played by the different environmental and strategic aspects that push the growth of the healthcare system within the country. The March topic of IPM Diaries is Davids and Goliaths of the pharma industry who collectively strengthen the Indian pharma market. Here we study the strategic approaches used by the big and small players to drive success in the Indian pharma market. So the webinar would be on 17th March, Monday, 10:30 a.m. And the link for the webinar will be shared soon. You can connect with me on this email ID in case you have missed the earlier topics and would like to have the link for the same. Thank you so much, everyone, for joining us today. Have a great weekend and have a great week ahead. Thank you so much.